Hi Fools, welcome to Market Checkup, the Motley Fool's healthcare-focused investing show. I'm David Williamson, and I'm joined as usual by Michael Douglas. Michael, it's great having you here on Friday.
Happy Friday.
And I promise you, we did not color coordinate ahead of time. It's a coincidence that we're both wearing purple, but as a Ravens fan, I appreciate Purple Fridays, so a little shout out for that. But we have a real busy show. We've got earnings, we've got a couple stocks that have taken a pretty big hit. We got more pharma deals. It's pretty jam-packed. So
yeah.
Let's get right to it. Let's start with our big mover, which is Endocyte. Now shares are getting just absolutely hammered today. They're down over 50%, down about 60%. This is after a phase 3 trial for their lead drug, Vintafolide, was stopped early by the Independent Data Safety Monitoring Board for lack of efficacy. I was surprised. It caught Endocyte by surprise. I think they said they were surprised and disappointed. I think investors were as well.
Well, I mean, when you see a 60% drop, people are pretty surprised. Well, and the thing was, this had gotten a favorable review from the Community for Medicinal Products for Human Use in the EU.
That's the EU's FDA.
Exactly. I mean, this really felt like it was pretty close to a done deal, and it just was not.
Well, it was even given a preliminary conditional approval, basically.
Yeah.
So for ovarian cancer. Now, the drug will soldier on. It was also being tried in non-small cell lung cancer.
Right.
Merck's going to have to make a call there, though, if they're going to move that into phase 3, despite the setback. I mean, that's the beauty, I guess, here for Endocyte, is that it's not necessarily their decision to make. They're not going to have to spend the money on development because they did that deal with Merck. This is actually a decent blow to Merck.
Yeah.
This drug was seen as one that could have had some nice sales potential. Of course, non-small cell lung cancer is the larger indication, and just losing in one cancer indication, doesn't preclude it working in another. What do you think of Endocyte now?
I mean, I've got to say, I think it may have been a little bit overdone, just because
the sell-off.
Yeah, because I mean, this is a really enormous drop-off. They've got other opportunities here. More the downside was kind of on Merck. So I want to wait and see more data, but I'm not necessarily completely opposed to the stock right now.
Yeah, I mean, it's under 300 million, right? They have over 200 million in cash. So they're trading not much more than cash on hand. Now, obviously, cash doesn't last as long in an unprofitable drug development business.
Right.
But I do think that makes it a little more interesting. They also have 6 other drugs in development.
Right.
Who knows what Merck will do with Vintafolide? They could hand it back potentially, but I have a feeling they'll probably see what happens in non-small cell lung cancer. Early results have been good there.
Yeah, very.
Although they were good in ovarian cancer as well. So that's sort of how drug development goes sometimes. But I do think at this price it's a little interesting, but it's certainly risky to jump in after a big failure like that for a flagship product.
Yeah, I just wanted to say, for once, usually when we have a major market mover down, I'm like, yeah, stay away, stay away. This time, I actually don't feel that strongly against it. I think definitely I would want to watch from the sidelines, me personally, but I can understand how somebody who's a little bit less risk averse might not.
Yep, I think I agree with that. All right, well, let's move from Endocyte, which was down big, to Pharmacyclics, which is another biotech, also down. Not as big. Shares are down about 10%.
Yeah.
For those of you out there not familiar with Pharmacyclics, it makes Imbruvica, which is a blood cancer drug. It's partnered with Johnson & Johnson. This is a drug that is supposed to be a mega blockbuster. A lot of enthusiasm behind it. The company announced earnings.
Yeah, and honestly, looking at the quarter, not bad.
Yeah,
I mean, the total revenue just shy of 120 million. About half of that was license and milestone revenue, which of course is kind of hard to predict moving forward. We understand that. That's kind of part of the deal. And considering that Q1 of last year they had just under $3 million in revenue, 120 million looks pretty good by comparison.
Yeah, when you read the earnings release, you're like, things are moving along swimmingly. And then there was the call. It was a really strange earnings call.
Yeah.
One of the stranger ones I've read in a while. Management gave guidance that I think threw everyone off. Essentially flat growth for Imbruvica for the rest of the year.
And not really a good explanation sort of why. I mean, people kept kind of asking about it. They said, well,
Yeah.
you know, there are all these
It's just
outside
about-
factors that we can't control for.
Well, it was really weird. It was almost defensive. Like,
Yeah.
so because just about every analyst asked, I would have asked if I was on the call. And management was arguing that you know, they want to be conservative. You know, it's not their job to you know, put these big numbers out there. You know, they don't want to miss it. It's not their job to stick their necks out, you know, predicting something. This is their sort of bear case scenario. But, you know, why even do that? Like, if this is your worst case scenario, no one's modeling a decline in Imbruvica.
Right.
Like, just don't give guidance at all.
Yeah.
Now everyone's concerned about, well, what is going to happen? If you're saying you don't want to stick your neck out and give a real guidance estimate and miss it, what are you seeing that's causing you that red flag? I mean, it's just really, really bizarre to me. Just a strange decision to even put such a low number out there and then have to be defensive about it. It really altered the whole tone of the call.
Mm-hmm. Well, and that number, for the record, was $295 million in net product sales. And when you back that out, considering that they had about $56 million in sales this quarter, that works out to something like 40 million under, you know, if they had this same run rate. So just very strange, flat to a little bit down. And especially when you look at, I mean, there are a lot of opportunities here for follow-on indications that they're doing. It's just all very strange.
It was really weird. We'll see if Johnson & Johnson says anything about it at some point, but just a weird call. Certainly going to keep watching pharmaceutics. I mean, this is a big-time drug. We'll see what happens here, but if it's sandbagging for future earnings beats, like why go through all the trouble? Just leave people in the dark, let them make their own estimates.
Right, and just say we are not comfortable giving out guidance.
It's still early in the product ramp.
Yeah,
well, and I think everyone would have understood that. May have been a little disappointed, but they certainly wouldn't have taken 10% off the share price.
No. Yeah, it was strange.
All right, well, let's move on from that strange earnings to some rumors. Let's move into the Pfizer AstraZeneca buyout. We got Merck possibly selling off 2 units now. Not just consumer, but possibly established products. What do you want to start with, Pfizer, AstraZeneca, or Merck? It's a dealer's choice.
Oh, well, let's go Merck then.
Let's go Merck, okay.
All right, so do you want to start with over-the-counter or the legacy products?
Well, you know, it's funny because I said on CNBC that I thought Merck's consumer unit would be the next sort of big pharma domino to fall as far as a sell-off or some sort of deal. I might not have even gotten the right Merck unit right. I mean, 'cause it looks like, I mean, they're trying to get rid of established products now.
Right.
These are generally branded drugs that have lost patent protection, so now, you know, they're facing generic competition. They still sell pretty well, but the margins aren't there. It's not what you're used to. Just sort of typical lower margin generic drugs. I was impressed by, you know, rumors of what they could potentially get, which is
15 billion.
Yeah,
I mean, which is not inconsiderable. You know, that's a pretty good number. And you know, Sanofi as well reportedly is also looking into kind of getting rid of some of their legacy brands for about 7 to 8 billion.
Yeah, about half of what Merck's is worth.
Right, exactly.
And we could see plenty of activity around that. I mean, the generic drug makers have been really busy bulking up. Actavis is a great example of one that's gone on an acquisition spree. Valiant, always out there looking to make a deal.
Although shockingly, we don't have any news about that today.
Yeah, not yet. But of course, yeah, that Valiant deal is out there. It'll be interesting to see what happens. I don't think there'll be a lack of buyers for these businesses. They're not sexy, but they make money.
Yeah.
It's pretty easy to calculate what's a good IRR. You know, how this makes sense for each business, who's acquiring it. So I expect them to do well with that. And when you speak about IRRs, it looks like the price may have gotten a little too high for one of the competitors for the consumer health unit.
Yeah, Reckitt Benckiser basically said, well, you know, we've got certain metrics we need to hold to, and it was getting a little too rich for our blood. So they pulled out, leaving, it seems, so the rumors go, Bayer.
Yes.
Most likely.
And then there was one.
Yeah, exactly. It seems like Bayer. I mean, again, you know, 2 days ago we were saying, well, you know, Reckitt Benckiser seems like a pretty good deal. So
yeah, I actually thought it was the best fit, but we said on the show it's not about who's the best fit, because Merck doesn't care.
It's about who makes the most money.
Yep, who offers them the most, and it looks like it could be Bayer, and it looks like it could be about 14 billion.
Yeah, exactly. And you know, this is a business that had about 1.8 billion in net sales last year. Reportedly, Bayer's considering doing part of it in cash, and then also signing away their animal health business to Merck. for this, which would help Merck get some scale there and
Yeah.
really do a little bit more.
Because Eli Lilly has jumped up. You know,
Right.
they were in 4th, and now they're going to be in 2nd after their recent acquisition. So.
Exactly, and you know, for on the Bayer side, you know, this does make sense. They've got a lot of OTC products, you know, Alka-Seltzer, Aleve, and you know, adding in some of these brands that have pretty strong name recognition, Claritin, Dr. Scholl's, Coppertone, would give them some additional scale and expand that for footprint there. So it does make sense.
Yeah, no, I'm not saying it's a bad fit
not at
for
all.
Bayer, but I gotta say, I like what Merck's doing a little more. I'd rather be the one selling these units and getting the money and putting it to you know, more creative areas, quite frankly. I mean, yeah, exactly. And Merck certainly has a really interesting immuno-oncology platform. They're going to be probably the first to market with MK-3475. We actually should get more data for that on their Investor Day, which is May 6th, this coming Tuesday. So expect us to be talking about it on Wednesday.
Extensively.
Extensively. Yes. That's Analyst Day. We should get hopefully something about the corporate restructuring because they've been kind of quiet on this. Also, I'm hoping we'll get something for Odanacatab, the osteoporosis drug. We should get some hopefully efficacy and safety data. I think that's an underappreciated asset. So definitely stay tuned for that. But yeah, Merck, if it sells both these and raises nearly $30 billion, that's really interesting.
Yeah.
That's a really nice place to be if you're Merck management.
Yeah, that's a lot of opportunity.
All right, well,
AstraZeneca, Pfizer?
Yeah, well, I mean, let's talk about a company that raised a ton of money by selling off units.
Right.
And now that money seems to be burning a hole in its pocket.
Right. So yeah, Pfizer has made AstraZeneca reportedly another overture for $106 billion this time, which is a little bit more than last time, and
not that much more.
No, just $5 or $6 billion more.
Yeah.
And AstraZeneca turned them down again.
Well, and it looks like the mix of cash versus stock is what's sort of unappealing, not the overall price.
Yeah.
Although I'm sure they'd like that to be higher too.
Right. I mean, of course, you know, management said, well, you're undervaluing AstraZeneca, but I mean, that's what we would expect if you're negotiating. Still definitely a lot to do here. But you know, Pfizer's been very active in a lot of ways. You know, they wrote a note guaranteeing that a certain percentage of R&D, if they acquired AstraZeneca, would remain in England.
Yeah, well, and I think that's a big thing, right? Because there was concern the UK government could come in and block the deal because they're afraid of losing research jobs and really just high quality jobs that Astra has. It's a large employer. Yeah. And you know, the concern is Pfizer, to squeeze out their synergies, would just start axing whole divisions. But it looks like Pfizer and the government have come to some sort of agreement. And the government, you know, despite some calls from some politicians, does not appear to be standing firmly in the way of this deal.
Yeah, if it occurs, and
if it occurs,
we'll see more next week, I hope, or sometime.
Yeah, I think Pfizer's not going to go away until they are really convinced they can't make this work, because Pfizer clearly wants this, and I don't think they're going to be deterred. We'll see if they can come up with a package that AstraZeneca finds amenable, or at least AstraZeneca's investors really find amenable. But it's definitely going to be exciting to watch. A lot of deals that are happen this week, that are going to happen. I really like what's happening with big pharma as they sort of reinvent themselves and make their own paths to try to, you know, be focused and be in the top 3 of whatever they're doing.
Right.
All right. Well, let's move on from rumors to things.
Certainties.
Certainty. Yes, which
go.
is earnings. It's earnings time. We have a couple companies reporting earnings. We'll start. We'll stay in the drug development area. We'll start with Teva. These earnings were, you know, I think a bit mixed when you look at it. They missed on the top line, but they beat on the bottom line by a penny. Shares were up 4% on the news. I think it helped that Copaxone 3 times weekly drug launch is going well. Sales rose year over year 8% thanks to some generic drug launches. They had Avista and osteoporosis, and the chemo drug Xeloda.
Yeah, no, I mean, overall, you know, you had your generics were up 3%, driven by U.S. Generic sales of 17%, so really good strength there. And they bumped up their gross profit some too. Their profit margin, gross profit margin on generics went up to 43%. It was about a 10% gain. So good news there. looking at the generic breakdown, sort of when you go one step below the top line, looking at European revenue was down 4%, which is 7% in local currency. So they actually had a positive effect on currency, which is something we don't see very often. Rest of the world was down 9%, but when you factor in local currencies, it goes up 1%. So good news, or I guess let's say less bad news there, less mixed news there. So at least they were able to hold firm. Yeah. On the specialty side, Copaxone up a little bit, as you mentioned. You had Azilect for signs and symptoms of idiopathic Parkinson's, which is also an adjunct to levodopa and also a monotherapy, up 23% to 114 million. So good news there. Nuvigil for excessive sleepiness, up 22% to 101 million. So there was some growth there, and I think some generally good news.
Yeah, and I think what I like to see was that guidance was affirmed as well. What I think is interesting is that Teva is doing a split guidance, right? There are two scenarios. There's guidance with generic Copaxone on the market and guidance without. And I think it really speaks to how important Copaxone is to the company's bottom line when you see the difference, right? With generic competition, it's revenue of $19.8 billion and earnings of $4.35. Without generics, so if they sell Copaxone without a generic threat for the year, $20.3 billion. So really just $500 million difference in revenue, but earnings per share of $4.95. That's 60 cents per share.
Right.
Based on that $500 million.
Which is like something close to a 15% lift in earnings. Which emphasizes, again, just how important Copaxone is, how profitable it is for them. I mean, this is a quarter of their revenue, or at least it was this quarter.
Well, and basically half of their bottom line.
Right, exactly.
And so, you take a look at what's happening as far as this generic launch. Synthon is a company that plans to launch May 24th is the day. That's when the patent expires. Now, the U.S. Supreme Court said it would hear Teva's argument against the appeals court throwing out the patent. That's not going to happen until the next Supreme Court term, which is October. I don't know what that means as far as what's going to happen with generics on the market, because any company that launched, I mean, this would essentially be an at-risk launch. If you launch and that patent gets enforced by the Supreme Court, they reverse the appeals court decision to throw it out, and then the patent's good until September 2015. You are going to be in a lot of money, or a lot of trouble, because you're going to have to pay Teva a lot of money for damages and for the sales.
Yeah, well, and it was, I will say, it was a setback for Teva for the Supreme Court to not grant a stay. Originally, the argument had been that maybe the Supreme Court would grant a stay to allow Teva to retain market exclusivity until it had
that
heard
decision,
the appeal. But the Supreme Court said, no thanks. So yeah, really not sure how this is going to affect the generic market, at least until this case is heard and decided.
Yeah.
So definitely something we'll want to watch very closely.
Yeah,
that's
so huge day for Teva investors. And I think the one positive is that the 3 times weekly formulation of Copaxone is going really well. That launch is very strong. So I think they are going to hold on to a good chunk of their Copaxone market share, even with generics on the market. It's better than a once daily injection. Yeah. But that court date is just incredibly important to Teva, 'cause, to go from May until September of 2015 with exclusivity, that makes a big difference and gives them a whole lot of extra time to convert the once daily users as well.
Yeah, exactly.
Please circle that on your calendar. If you're an investor. We don't know the exact date of that judgment yet, but that is the most important thing that's happening with Teva this year.
Absolutely.
All right, well, let's move on to our final earnings of the day, which is WellPoint. This is the number 2 insurer. It's really the insurer that went all in on Obamacare, though, out of all of them. And let's start just with the stats, see what happened. You don't usually see a company pop like WellPoint did after it reported a 21% decline in net income. Michael, what happened here?
Right. So we had revenue. Their estimate had been the analyst estimate had been 17.96 billion. They missed slightly on the top line, 17.6, but that was still up slightly from last year. And then earnings per share, the expectation was $2.13. They delivered $2.40 in adjusted earnings, and that is what really, I think, did it. So basically, everyone was expecting them to lose more, to make less than they did, even though what they made was still significantly less than last year. So a big beat on expectations, a shrink in profit, but not as much as expected. So they beat, and I think people were pretty surprised, and it translated to some pretty good news for WellPoint shareholders.
Yeah, and it wasn't just this quarter too. I mean,
Yeah.
they ended up raising guidance as well. Again, we have to keep that in a little bit of a perspective though compared to last year.
Right. So $8.40 in adjusted earnings, still a little bit less than, or more. They're saying $8.40 or more. That's still a little bit less than the $8.67 that they turned in last year. But it's more than they had previously said, and I think that was probably a lot of the pop because, I think the market is a little bit more interested in what you're going to deliver as opposed to
in the
what
next
you have
couple
already
quarters,
delivered.
yeah.
Right, which as a Ford shareholder has really frustrated me for a long time.
Yeah, it's not. It's funny because the market's forward-looking, but not so far forward, right? Because
Right.
you don't see that much of a long-term thought process. But people are always interested in the rest of the year's guidance.
Right. Well, and it was interesting because the CFO actually said, he said, would this be conservative in light of Q1 results? It is fair to say that if the level of outperformance in Q1 were to persist, then our current outlook could prove conservative.
Yeah.
So even that lift might have been more conservative than is actually going to happen. So
Yeah.
really, really good news there.
Yeah.
You had a management team that was very clearly very pleased with where they were and really excited to push forward.
Yeah, I think WellPoint's really firing on all cylinders right
Absolutely.
now. Let's talk Obamacare and WellPoint though,
Sure.
because no one really came to focus sort of. Or really be at the central point, I guess, of a lot of the Obamacare exchanges is WellPoint. They went out immediately and said, we intend to have the largest footprint on these exchanges. So you would think that they would have the largest member growth, and it looks like that was about the case. They got, what, 600,000 new members?
Yeah, so they're guiding for 600,000 for the year,
Yeah.
and they said, we're only able to really model what we have right now off of the February 15th.
Yeah.
So everything post there is probably more than the 400,000 or so that we got now.
Because there was just an incredible surge at the end.
Exactly, and
Yeah.
so they said 600,000, but really it's probably more than that. That was definitely the sense we got from the call. So even that number, which is a great number, definitely better than Aetna turned in,
Yeah.
or is expecting for this year.
Well, and WellPoint always maintained that they expected to make money off the exchanges, while most of the other insurers were like, well, we hope to break even, or we're definitely going to lose something here.
Right, and they reiterated that again. They said, listen, some of the earlier folks were a little bit older than we originally planned for, but we generally planned for that in terms of looking at our pricing, and people got progressively younger as we got progressively closer to April.
The deadline, as was expected, and it looks like the overall mix has been pretty favorable as far as young versus old when it was all said and done with the exchanges overall. So you would expect to see that show up in WellPoint's next quarter's conference call as well.
Right, and again, their CFO said, that 600,000 new members hopefully will prove to be more of a low bar. So, just really good news there.
They're really setting themselves up to impress, I think, going forward each quarter this year. That's sort of the sense I'm getting from this earnings.
Well, and when you look at, they've been seeing about a 90% conversion from sign up to pay, which is better than we've been hearing from the other insurers. It may reflect the strength of the Blue Cross Blue Shield brand. Just more so than some of the others, or it may just be something else. And they've just been really pleased. And when you look at just their overall membership growth this past quarter, 1.3 million new members. It's a 4% lift. And it really cemented them as the number 2 insurer by size. So they have about 37 million members. Just really, really good news there. They've clearly been playing aggressively, and it appears to be paying off for them. One other point, real quick, their medical loss ratio, I think they call it their benefit expense ratio, but basically the same thing, right? The percent of premiums that you're paying out in medical costs dropped, which is very good news, from 84 to 83%, and that was primarily because they were able to do a better job with their Medicaid business. But it also shows that those Obamacare individual exchange enrollments are not hurting them, that they've done a good job of controlling.
Which is one of the concerns going into all of this.
Absolutely.
That these insurers would be hammered by them.
Right. So really, really good news there. Just overall, I think all good.
Okay. Well, one final thing on WellPoint earnings, because you know what I look for when I'm going through these earnings calls.
I'm gonna guess. It's Sovaldi.
It does have to do with hepatitis C, and I've been, as I mentioned before, just control effing because there's just been for Sovaldi, because there's just been really a ton of Sovaldi rage on these calls. Management for a ton of companies are just saying, this is going to break the country. This is destroying our earnings. It caused us to miss, or look what it took away. We're really concerned about this going forward. What did WellPoint's management say about Sovaldi?
So they said that they had priced for Hep C to double over what those costs were for last year, and they looked at that and said, well, listen, we had about $50 million of Hep C spend in the first quarter. That was incrementally maybe a little bit more than we'd expected. So we're going to go ahead and assume $100 million for the rest of the year. And as the CFO said, if that proves to be conservative in our outlook, then that would provide upside to our guidance. So just very clearly, pretty confident in their numbers. They were looking at it and said, okay, listen, here's what it looks like. We think a lot of that $50 million is due to warehousing. That makes sense. It looks like they did a pretty good job of controlling for it, expecting for it, and guiding for it.
Which is, I remember there was one of the Medicaid insurers, it was either Centene or Molina, basically on their call said it was a multiple of what we planned for.
That was United Health.
Oh,
that was United Health.
Yeah.
The market share leader said, we got completely sandbagged by this.
Yeah.
Didn't happen with WellPoint. And this is something I just want to highlight. It really, the sense that I've been getting is that management seems to have really done a pretty good job of planning for each of these things and doing good execution. I think they expected there'd be some decline in profitability due to Obamacare, with the taxes and the new SG&A spend for the exchanges, and so they were conservative in their guidance, and now it's paying off because they're able to move it up.
So in terms of only insurance, so let's remove sort of Optum from United Health. Would you say after, because we've gone through the calls on all these, would you say right now, as of this exact moment, WellPoint is the best operator in the sector? I'm putting you on the spot, Michael.
Oh man, you are. I think so. I have just been very impressed with their ability to deal with a variety of kind of to some extent one-time issues, right? And this Hep C spending issue is going to probably be resolved in a couple of years, one way or another. Either with someone deciding to undercut Sovaldi on price, or everybody getting cured. You know what I mean? And so they've just done a really good job of controlling for all these things. I think
they played the Affordable Care Act probably better than anyone else.
Remarkably well, and their guidance was spot on, if even a little conservative. And yeah, I've got to say, I think I am the most confident in them at the moment.
All right. Well, there you have it. WellPoint is the best-in-class operator right now of the managed care companies.
Yeah.
All right. Well, thank you, Michael. I hope everyone out there has a great weekend. We'll be back with you next week for more earnings and more market movers. Stay tuned for Fool.com for all your healthcare news, and Fool on.